Well, welcome back, everyone. It was a volatile week in markets, and I just got off the phone with Rob. We were talking about how best to inform the entire community on where this market is, and I'm also going to share a little bit in this video of what I was doing about it. So I got a slide over here directly from Rob, which includes that head and shoulders pattern. You may remember early September, Rob and I were talking, and he asked me to give you a little insight on the overall market pattern that you've heard me talk about over and over here. The left shoulder, the head, the right shoulder, and the neckline breaking in and around that 434 to 433-ish area for the SPY. Now, the market at large has seen an increase in volatility driven by geopolitical events, monetary policy, and earnings, which are still to present. The market overall is nervous, but hasn't actually broken the next major level. So you can see with the two red bands that Rob has had on charts. This is not new. These have been going back in time. There is a level between roughly 425 and 420 on the SPY. That is a support zone. You can also see it early October, but really more importantly, going all the way back over here and looking at how it played out in May. Now, you may remember April and then into May, we were up against this resistive area, and you heard us saying, this time, maybe a little different. It took some time, but we did end up breaking out, and the level has been retested now twice. The very fast and larger price moves over the two last trading days do imply there's more risk. Now, where could it take us down to? If we take that head and shoulders pattern that Rob informed us of and identify the distance from the neckline to the top of the head, that value applied to the breakdown point projects us roughly down to the 410 to 407 area. Now, I'm not saying it's what happens. These patterns tend to become self-fulfilling prophecies because of everyone's eyes and attention on them. But we're at a spot right now where, as you just saw in the prior slide, we're at a supportive area. We're deeply oversold. An oversold bounce would not be out of the ordinary, but if we lose support of that 420 area, where is the next several levels that one can point to fairly easily? Now, they are fairly round in number. The next major area that one could look at is this yellow zone. That's that breakout area from late April, really early May. And that 415-ish area would be the next zone between it and then, of course, all the way down to the potential head and shoulders target, which would be the 407-ish area. So that 415 to 407, for all intents and purposes 405, could become a significant risk if this market is not able to hold that 420 area. And the message that I want to send is the same one that I've been sending in videos just like these and to members of the Active Trader Room and wealth charters at large. The market is not configured for bullish swings outside of things that could become hedge-worthy or things that are inverse in terms of how they behave. It's a day trader's market. So you've seen me do lots of day trading in the Active Trader Room, but I'll share a little bit about what I've been doing in this market week as well. I've used silver as an opportunity, as a hedge, if you will, but for me it was more just a trade. And I took the trade live in front of members in two tranches. I actually used Canadian dollars for it, and I showed members at the same time how the very similar US dollar denominated ETFs were looking. And I took on a couple of thousand shares on, as you can see, the 17th, then the 18th, and I maintained the position, letting members know yesterday into the close, being Thursday into the close. You're watching this on the weekend, and I hope it's a good weekend. I hope that the world is calmed down. We are in a spot where that Thursday close still gave me enough to say the tools and the rules support some downside risk in equities. That downside risk in equities has been turned into an inverse correlation with precious metals, gold and silver up likely, and silver, when they get their hands on it, that little group that loves playing around with it, look, it's a very volatile commodity. It's one of those commodities that can do really well, but it can hurt just as bad. And I know that this is a part of the overall mix. What I decided to do was take profits earlier in the day. And the ETF made a move that took it up to about $20.40 or so, or 45 pennies. Now, to be more specific, the high of the day on that ETF was $20.47. So I didn't sell the top. Let members know exactly why I'm taking it off the table. And of course, it did end up coming down into the end of the day, closing at 1993. So the exit at 2026 on an average cost of 4,000 shares at 1914 did gross me about $4,460. By the time I'd taken the snap, it had gone up. But bottom line is, you can see the print right there. And this is no guarantee of future performance nor past track record. This is a volatile trade. You've got to consult your registered advisor before making any trading decisions. So I'm just letting you in on some of the things I'm doing over here. The picture that you can see right now has the full tally on it. Same thing as the last slide, but I wanted you to see Canadian and US dollars both on the same screen there. So it was a fairly decent trade that relied on the volatility in this market persisting. Will it persist into the week ahead? And that takes us all the way back to the exact same question that we started this week with on wealth charts during our Hour of Power. Is this market susceptible to playing out the remainder of that head and shoulders pattern and taking us down to that 407 area? Now, the comment we made at the beginning of the week was it probably is not the week that we go all the way down. But that doesn't mean it's not ahead of us. And that's what I said verbatim to the group earlier in the week. And I want to echo Rob's comments. That zone where those red bands are, that's where danger lies. Be very careful. We're looking forward to being with you and helping along the ride and sharing with you some of the things that we're doing in a very exciting time in the market and a very dangerous time. Take good care, folks. Hope you have a wonderful weekend, and I hope that we see you first thing on Monday morning over at Wealth Charts for the Hour of Power and, of course, in the Active Trader Room. Wishing you a wonderful rest of your weekend, and thanks for watching. Big shout out from Rob. Wants to make sure that he says hello, and I'm trying to pass on his love to the entire group through me. We're working real hard right now on making sure we get ready for an incredible set of sessions we're going to be doing for you next week. More on that first thing tomorrow, Monday morning. Have a wonderful rest of your day. Bye for now, folks.